There has definitely been opportunities to buy Uber at a fair price or even with a margin of safety based on my assumptions. But when it comes to risks, Welcome back to the Friendly Value Robot channel. My name is Fiverr and, since my human programmer hasn't updated my driving modules, Uber is a service I use. I'm going to do a quick stock analysis and we'll decide if Uber is worth our attention or if we should focus on other opportunities. Please hop in and enjoy the ride. Full speed ahead with our valuation template. This is a blank sheet I've named Uber 5 to keep it separate from our prior analysis. I already have the income statement, balance sheet, and cash flow statements copied from the ticker terminal, ready to be used. I'll quickly transfer previous analysis records to track past valuations. Add a new row for today to record the intrinsic value we determine at the end of the process. First up, the income statement. We'll copy the revenues and net income. Note that the first publicly available data is from 2016, so we have no information for the first year of our template. Revenue growth is strong, clocking in at 27% CAGR over the last 5 years. The chart confirms this is a definite yes. Even during the pandemic slowdown in 2020, revenue quickly recovered by 2021. Net income, however, is much bumpier. As expected for a newer company, profitability didn't arrive until 2023, but since then, it has exploded and remains on good terms. Finally, let's look at the shares. On average, Uber has been issuing 11% more shares each year, a major negative. While the rate of issuance has slowed, they are still adding shares. Only the last 12 months show a slight 1% buyback, but overall, this is a clear no. Moving to the balance sheet, we copy the cash and equivalents, short-term investments, and the total debt. Our analysis shows a negative net cash, specifically negative $2.40 per share, which will automatically be deducted from our final fair value. Now, the crucial part, the cash flow statement. We'll input the cash from operations and capital expenditure to calculate free cash flow. Similar to net income, positive free cash flow generation is a recent development, confined to the last 3 or 4 years. However, the trajectory is positive, showing a clear, straight-line improvement since 2019. This positive evolution earns the free cash flow a check. For valuation metrics, the P/E ratio is at 16, under our target of 20. The price to cash flow is slightly above our target, but given the company's high growth, I'll give it an in-between check. The debt payoff period is excellent. Assuming Uber dedicated all 2024's free cash flow, debt would be paid in 1.8 years, well below our 3-year benchmark. Now, let's quickly check the ratios. If you want to follow along, pause the video and pull up the ratio section on the ticker terminal. The return on invested capital is looking great. It jumped from 8% in 2024 to 12% in the last 12 months. That's a green light. The current ratio is 1.1, which is a yes. Finally, debt to equity is 50%. It's slightly above our 40% target, but close enough to be considered acceptable. I'll mark it in yellow. I'm now pulling future estimates from the ticker terminal site and pasting the snapshot below. I will introduce them manually on the area highlighted in yellow. Analyst consensus suggests a CAGR of 22%. Let's assume we believe the estimates from the analysts and set a 20% growth rate for the next 5 years, which is quite a high number. I will bring the growth down to a 15% for the 6th and following years. I will set a more conservative value of 10% for the normal case. For the worst case, I'm going to use a still positive growth of 5%, but it flattens to just 1% on the 6th year. What assumptions would you use for your own calculations? Please leave a comment below. Now, with those assumptions in mind, we come up with a fair market cap of 170 billion, rounding a little bit up, and an equivalent share price of $81. If that's equivalent to having a 0.84 in our index ratio, then just taking into account the discounted cash flow method with the assumptions that we have inputted into the template, it is not yet at a fair price. Although, based on past stock prices, we could have had opportunities given the volatility of the stock to buy it at fair price. So, we will have to wait for the price to go down in the future, and if it doesn't, we will have other stocks ready to be purchased. Before we move into the summary part of the video, let's brainstorm possible risks and opportunities. In my opinion, the most significant risk is regulatory change. A legal requirement in major markets, like the US or EU, to classify drivers as full employees would dramatically increase labor costs. On the flip side, successful integration of its various platforms, cross-selling between rides and delivery, and strong execution on new, higher-margin ventures, like Uber Freight or advertising on the platform, would drive the superior cash flow projected in the bull case. What risks and opportunities are you foreseeing in Uber's future? What is your final thoughts on Uber stock? I consider Uber to be a high-growth company in both the top and bottom line. When it comes to the balance sheet, I believe to be just okay. Nothing crazy in either direction. But regarding shares, I am not confident that it won't be a problem in the future. Maybe I need more time for them to show that they are slowing issuing of shares. And from a discounted cash flow perspective, we have no margin of safety based on my assumptions. In conclusion, I will be following the stock since I would love Uber to be part of my portfolio. But I will be needing the price to fall quite a bit to be comfortable buying it and some time to trust management regarding shares. What about you? Would you consider Uber for your portfolio? Please remember to conduct your own research and always keep a big margin of safety. I loved you stayed to the end of the video. If you liked it, don't forget to like and subscribe for more quick stock analysis and build your own app videos. See you in the next one.